Jonathan Garner is Chief Asia and Emerging Market Strategist for Morgan Stanley. And Jonathan, thanks for coming in. What do you make of what's happening? I mean, this essentially has hit the targets that you'd put into place. So right now, well, do we consolidate? Do we go down? What happens?
I think we do correct here on topics. We got concerned late last week. The market's been more than 3 standard deviations overbought. That's the most since 1987. We've had a big rise in consensus earnings expectations for topics. They've now actually reached the kind of number that we've had since the start of the year. So a lot of people have joined in this rally, and there's a great story to tell in Japan, but we're now moving to a more difficult phase of execution, both on the macroeconomic side and also corporate earnings delivery.
Yeah, I mean, this has been really predicated on euphoria more than anything else.
Well, what the BOJ did is very significant, doubling the monetary base.
I'm saying ahead of that, there was euphoria.
Yes, yeah. Exactly, and in fact in the immediate aftermath, but that's what's taken the market to a technically very overbought level. And at the same time, what we've seen is some of our favourite sectors, like financials and consumer discretionary, have become even more overbought than the market as a whole.
Right, so what do you do next as an investor?
Well, industrials in Japan still offer some significant value, we feel, but also markets outside of Japan in the rest of Asia. You were just commenting about the Korea stimulus that we've just had. They've derated very significantly versus Japan this year, and they're probably worth looking at this moment.
Yeah, so they've gone back. I mean, the Kospi's been one of the worst performers. I want to just stay with Japan, though, for a while. And, you know, you've been grading the various industry groups here as well. A couple of them, immigration incomplete, tax system incomplete. Of course, that's something which is in the works, isn't it?
Yeah, that's from my colleague Robbie Feldman, who's looking at the microeconomic reforms that we need to see, what's called the third arrow in Japan, that we need to see to actually take the market to the next level. And we'll become a lot clearer on that in the summer time frame, particularly after the upper house elections. We'll see what the actual proposals really are. Right,
well, you know, what are we looking at here? I mean, agriculture, need reform there. I mean, I'm just going to give them a B on that one.
Well, it's really around liberalisation. It's about opening up Japan's economy more to
TPP
free
as well,
trade.
of course.
The Trans-Pacific Partnership Agreement with the United States is very important that progress is made on that. And labour market liberalisation is really crucial, to actually allow the labour market to function. R&D spend needs to rise significantly in Japan, and there needs to be tax incentives around that as well.
Now, one of the highest marks went to energy. I suppose this is a diversification in light of what happened at the Fukushima nuclear facility.
Yes, it is. I mean, Japan is becoming more diverse in relation to its energy infrastructure.
Yen, tell me, what is your target now when it comes to that?
Again, last week we got to our near-term Q2 target of 100 yen dollar. Our year-end target is 105, and our view on the yen is that we do weaken, but much more slowly than we've seen thus far, and we'll be more subject to setbacks along the way, one of which, of course, we're seeing this week already. Yeah,
well, when we look at what's going on here, I mean, we're again having a pullback when it comes to the dollar, or should I say, it's just strengthened a little bit, but nothing goes in a straight line, I suppose. So there has to be a catalyst which gets us above that 100 level. What's that going to be?
Well, we can't put our finger on the near-term catalyst to take us there, and that's why we feel this risk-reward situation is now more balanced. There may be catalysts come the summer, but we've got a time frame now when positioning has become quite extreme in the yen and also in the stock market, and hence we're concerned about the risk-reward balance. Okay, start of this year it was buy Japan, sell Korea. We've had that, and are you saying the table should be turned now? Yes, I mean, basically, Japan has to deliver on the corporate earnings growth front. We're expecting 70 yen of EPS, about 50% earnings growth. Korea has to disappoint now, given where it's actually priced. It's trading the cheapest to Japan in 10 years on a price-book relative. And so, let's see what
happens. Too much bad news priced in is what you're suggesting?
Probably, yes.
Okay. Jonathan, great having you on the programme as ever. Jonathan Garner there from Morgan Stanley.